Hey, what's up guys? It's Ezekiel Chu here. So in this video, I'm going to show you the Forex strategy that I use daily for all my trading. Yeah, and it's the same one that I use to make 6 figures trade like this. So by the end of this video, I promise you that you will be using this strategy for all of your trading, and your trading is going to level up after this. All right, I'm excited, right? So let's get started. You got to trust the flow of this video, okay? And watch this video to the end. All right, so you know something? Like most traders, they stare at a single time frame and they wonder like, why do they just keep getting like blindsided? Like what happened? What happened? Why was this a loss? That kind of thing, right? So here's the thing. The market don't move in a single way. Every price action, every movement that you see is part of a bigger trend. So if you're not looking at multiple time frames, you are trading practically with like one eye closed. All right, so here's how to do it correctly. You got to start off with the higher time frame first. So that is like your roadmap. So it tells you whether the market is bullish, bearish, or is like just going nowhere. So if you are going to trade against it, you are like fighting an uphill battle. So after you start with the higher time frame, right, you now drop to a lower time frame for your entries. Now that you know the overall trend, you now zoom in to find precise entry points. So this prevents you from like jumping in too early or too late itself. If you think about it, it's like adjusting your camera lens. Okay, today is the phone, right? Right, adjusting your camera lens, right? The higher time frame, it's like a wide shot. Right, you take a big picture, wide shot, right, showing the full landscape. The lower time frame, right, you zoom down to low time frame, is where the lens zoom in and focus and revealing the details that you need to make the right move. Let me break it down. Let's say you are on the 1 hour chart. So now you're gonna see these two candles. So first off, you see a bullish candle that opens what? At a low and then it closes at a high. All right, then the second candle, right, you see a bearish candle, the red candle that opens at a high and closes at the low. So now this is the 1 hour time frame. On the 2 hour time frame, these two candles are going to combine to become a what? A bearish pin bar. A bearish pin bar, what? It shows what? It means rejection from, and especially when placed at key levels, this kind of bearish pin bar are super powerful to go for a reversal downwards or continuation downwards. All right, so if you see this, instead of like, oh, I see a bullish bar, bearish bar, like what? You are now reading a bigger story behind price action, right? So you are no longer in a way, I'm going to keep going, but you're no longer in a way guessing. Because when you learn how to use multiple time frames, you are be able to see not just candles clearer, you are able to see the whole chart clearer. You're able to enter more precisely, get out more precisely. You know exactly why the market is going sideways, up or down, why this reversal didn't work, etc. All right. So cool. Let's move on. Most traders, they are not using multiple time frames the right way. All right, they zoom in too much, right, such that they are like lost in all the noise in the market, or they zoom out just a little bit too little and they think they are seeing the big picture, but they actually are not. Here's the thing, when you zoom out too little, it's meaningless, right? So for example, here's what I mean, okay? If you look at a 5-minute chart and then you think that, okay, I'm going to look at a higher time frame, I'm going to look at the 10-minute chart. The 5-minute chart and the 10-minute chart or the 15-minute chart, they are practically identical. Switching between them is not going to give you some big insights. It's like watching the same movie, but maybe skipping every other scene. You're not learning anything new. So if you want to zoom out, you got to zoom out with purpose, right? So jumping into like a slightly higher time frame, like the 5 minute to the 10 minute to the 15 minute, it's not going to give you a clear picture. It's like, let's say you are on the ground right now. You're just standing on a chair to look a little bit higher. But what you need is maybe a second story view, a third story view to look at the whole neighborhood. So here's the rule. If your higher time frame doesn't give you like a completely different perspective, it is of no use. Instead of switching between this kind of nearly identical time frames, you got to go for something that is really contrasting, right? Something that can change your decision making. All right, so otherwise you're wasting time. Okay, now here's the next thing. The first one was they zoom out too little, right? The other one is some of these traders, they zoom out too much. So zooming out too much, it's also an overkill, right? It's also an overkill. So for example, if you are trading the 5 minute time frame and then you now look at and jump to the monthly time frame. So it's like, what are you trying to find? Right? The big picture from months ago is not going to help you to enter a trade that plays out in minutes. Right? It's not gonna happen like that. You get what I mean? The key is that sometimes it's like, oh, I need to get monthly information, the weekly information, etc. Sometimes it's not more information. It is the getting the right information. So the sweet spot in multiple time frames is not about going as far back as possible, that kind of thing. It's about finding the time frame that gives you the context without making you lose touch of your actual trade itself. All right, so how do you do that? All right, how do you do that? Let's get into it. All right, now the sweet spot. So there is a perfect balance that you need to hit. You zoom out too little, you're trading in a way blind. You're not seeing the bigger picture. You're trapped in all this volatility in the short-term noise. And if you zoom out too much, right, you get irrelevant data that is not going to help you when you are trading this time frame. So what is the sweet spot? I'm going to share with you now 4 secrets. 4 secrets on how you can use this powerful multi-time frame trading strategy. And it's going to go with the flow. It's going to stack all together and it's all going to come to you. Okay? Secret number 1. The 4 to 6 factor. Now, when you use multiple time frame analysis, you want to use a factor of 4 to 6. So let's say we go with a factor of 4. And let's say you are trading the 1 hour time frame. The higher time frame that you're going to go zoom out to would be the 4 hour time frame. So how do I get the 4 hour time frame? So what you got to do is you multiply your time frame by the factor of 4. So for example, if you're trading the 1 hour, your higher time frame times 4 is the 4 hour chart. So let's say if you're trading, say, the 5 minute chart, you use the factor of 4 to 6. So you multiply the 5 minutes by 6, right? You get 30 minutes, and that is your higher time frame. All right, so let's say if you trade on the 2 hour chart, then you want to use the factor of, say, 5. So 2 hours times 5 equals 10 hours. So that is your higher time frame. So understanding this method, the 4 to 6 method, it keeps you from having mistake of zooming in too in or too far off. Get it? So this is where you always have the right perspective. Okay, now let's move on to secret number 2. All right, secret 2 is combine levels. What are combined levels? Think about, say, Valentine's Day. Which is a bigger deal? A Valentine's Day dinner, right? A simple Valentine's Day dinner. Or number 2, Valentine's Day plus is also the birthday and it's also the anniversary on the same day. Obviously, the second scenario is a more important thing, right? It's a bigger deal. When there are more events, there are more significance. And that is the same with trading, right? So when, say, a support and resistance level, it aligns with multiple time frames, it becomes a whole lot more powerful. So that's where the big monies are being made, and that's where the big boys are also stepping in. And that's where you want to take action. So now, most traders, what they do is they look at the level, let's say the daily time frame, and they stop there. And they don't go beyond that. No. It's a big mistake. Here's what matters. If that same level aligns and combines. So let's say you saw a support and resistance level in the 4-hour time frame, for example, and that level combines with key levels, let's say in the daily time frame or the weekly time frame. Now it's no longer a ordinary level in the 4-hour time frame. It becomes a high probability zone where price is high chance of reacting at that level. So therefore, before you take any trade, you ask yourself, is this like a random level just in that time frame, or does it have real backing from the higher time frames? Right, so that is the difference of like, is this a good trade or not, versus like, this is a good trade. Get it? All right, so now let me open up the trading platform and let's take a look at the charts. Okay, so I've opened up the trading platform, right? So the platform that I'm using is Okta, right? So I'm going to show you this pair itself, and you're going to see why. So let's take a look at this. Like, let's take a look at this area. So why did price comes down from here, right? Why did price in this area comes down? And then you may say, okay, ZQ, right? This is a resistance level, right? So there's a previous high here, and then price meets the same resistance level, and that's why it's go down. Yes, it makes sense. Now, this is a resistance level trade in the 4-hour time frame. Is it a good trade? It's an okay trade because it's just a resistance level. Is it a special resistance level? Not. If you just look at the left, there's really nothing much over here. It's just empty space, right? So now, but had you used multiple time frame analysis, you will notice that this resistance level is probably not just a 4-hour high level whereby price reaches the same level as the previous high, right? Then we decide to take a sell because price reached the previous high. So now let's jump the next time frame up. So remember the factor of 4 to 6, right? The factor of 4 to 6. So 4-hour, we will what? We will multiply by 6, which is the next time frame, which is the daily time frame. So if you see on the daily time frame, okay, so on the daily time frame, this was the 4-hour area that we were looking at over here. All right, so now, all right, but had you looked back on the left, there was a big gap, right? So if you can see price respected here, right, and then it broke through here, 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 and here. So kind of, if you see what happened over at this zone is that price went up, test this level as a whole, as a zone. It couldn't break through, it comes down. It goes up, okay, it tests and it broke through. Respect the level, broke back down before shorting back up. Respect the level, hits up, comes back down to test the level before going up. It comes back down, broke through the level, went back up to test this level to make sure that it has broken before dropping back down. And that's the reason why price came back up to stop at this level. So in a way, this level is like a middle zone, right? With multiple respect, right? In the daily time frame. So now this resistance line is no longer merely a 4-hour resistance line of the previous high. It is now an important level in the higher time frame. So this gives you an increased probability that this trade, when taken, may go down more than merely a 4-hour resistance line. Get it? Yeah? Okay, so do you see the significance of this? This level that I have is no longer a 4-hour time frame support, right? It also now is a daily level area of importance, right? So when using multiple time frame analysis, combine levels, right? By first what? Identify a key level that aligns with higher time frame levels in the same area. This kind of confluence is going to make that level and that entry a whole lot more powerful. So now let's progress now to secret number 3, where it's all going to come together. when you understand multiple time frame analysis, you will know when to buy and when to sell. But what you don't want to do is to buy when price is like far from the area of value, right? Far from an area of value, far from a value area in the higher time frame. Let me show you what I mean. All right, now let's take a look at this chart itself. Okay, so this is Euro USD, right? Euro USD. So for Euro USD, let's see this. So price has been going up, it comes down, it goes up, it goes sideways, and then it breaks up. It breaks up. So it's like, oh, uptrend, highs, breakout. Let's get in, right? Let's get in. Let's go for a buy right here. And that is the thing. Like, so a lot of traders, they would go for a buy here. Like, it's a breakout and everything, and they're going to go for a buy because, like, I'm buying. The trend is my friend, right? It's the trend of my friend, right? So this is in an uptrend, and there is a consolidation over here, and then there's a breakout. So whoa, this is a fantastic trade. Now, it is if you look at it in that idea, right? That trade setup. But had you looked at the multiple time frame analysis, so let's go to the multiple time frame analysis. In this case, we go to the daily time frame. If you see in the daily time frame, and let's go back. Let's go back. If you kind of see what happened after which, right? What happened after which? So you see, this was where we entered, right? Around here, and then the market dropped down after which. Now, why? Could we have avoided that loss? Could we? What was missing, right? What was missing? Now, if we go to the higher time frame, right, the factor of 6, right? So 4 hour go up to factor of 6, right? 4 to 6, right? So it will be the daily time frame. Now, if you see, let me draw some lines over here, right? So let me first draw a horizontal line, which is here. So you see, if you see, so I kind of want to read it out, right? Price goes up, test, comes down, test, and broke, right? So this is a breakout, right? So after the breakout, price has been in an uptrend. Beautiful uptrend. So what we're going to do is, if you can see, it's an uptrend, right? So what we can do is to add a trend line. It's like a, so if I kind of connect the bases, right? And then if I also connect the highs, right? It is about there. Okay. Yeah. So about there, right? Something like that, right? The highs, right? So if you see, after the breakout, it kind of moved in a channel. Now, we were looking to buy over here. Is this a good area to buy? You know, we should always buy at what? We should always buy into the area of value. So where is the area of value? Area of value is always at the bottom, right? For example, when price goes up, it comes back down. If you can see, price goes up after the breakout, right? Test, broke out, comes back down to the base trend line. It hits up, comes back down to the base trend line, right? So that's where we know, right? About there, right? The lows, right? That's where we know. Okay, the base trend line is holding, that's great. Then the upper trend line is also holding. Test, comes up, test. Right, so then when price goes up to test again, had you plotted this and had you understand the multiple time frame analysis, you would now realize that, hey, you are buying at the top, right smack at the top of the channel. Right smack at the top of the channel. No. Is that a good spot to buy? No. Where should you buy? Instead, you should wait for price to come back down to the area of value, which is, in this case, the base of the channel, right? All these spots are the best place to buy. All these spots here at the top, they are not the best place to buy, because when price goes up, yes, it can make it go, but it may go up, it may go sideways, it may drop. So getting it entered at the area of value is the best place for placing your entries. And you would never have known that, correct? Had you just been looking at the 4 hour or whatever lower time frame, because we saw the breakout and it's making higher highs. Am I right to say that? Yes, yes, yes. So this is the power of multiple time frame analysis, right? So we could remove all that. And you know what? Like one thing that I really like about this platform is that it has inbuilt price alert. It's crazy. Like in past, we have to go to other platforms to set up price alert and etc. So for example, when price comes down to here, like let's say if let's say I decided to buy, I'll wait for price to go up to here. I will set the alert at this level itself, and then it will just ping me, and then I'll just go in and execute a trade, all in the same platform itself. I think this functionality is what like I use the most, right? What is also really cool that I would think a lot of traders would find it really beneficial. It is they have Okta, they have the inbuilt AI-powered chart pattern inside. I think that's crazy. You see, they actually analyze for you all the different time frames, bearish flag, all the patterns that you would have never be able to had you been not well versed, had you been not looking at all the different time frames, you will not be able to spot all the different time zones. Like for example, they have already drawn all the specific areas for you. Like this is sick, right? This is sick. This is like okay, sometimes you know, like you especially whereby you're looking at a chart, like you couldn't really like, where is the best place to spot the level? Is this an ascending triangle? Is this is this that? Is this a double top? Oh, this is now all done for you itself, right? So So that's like really cool. Yeah, so I think this is one of the functionality that I was like also like starstruck. right, so coming back, I just strayed a little bit. Yeah, multiple time frame analysis, this is like so good, right? Remember, at this I use this methodology all the time when I trade, right? Then when you're ready, for example, when price comes down to here, what you can simply do is just execute the trade, right? Execute the trade. What is also really cool that I found in Okta is that they, typical like MT4, MT5, it's whereby you buy and sell, that kind of thing, right? Now they not only tell you the monetary equivalent, that's really important. Like in the past, I just put a lot size. I do not know how much does it, am I risking, that kind of thing. Now they tell me the money equivalent. But what is also really cool is that apart from take profit and stop loss level that I could add, I can actually set trailing stop loss if the market keeps going up, right? And I think that on trail, maybe I just set it how many pips apart. I can even set it when price goes up, how many pips. I want to set it to break even itself. So this is like, I don't know, it's like truly an all-in-one platform. Like they have all the pairs, right? They got all the pairs, they break it down into forex, crypto, indices, metals, right? Energies, etc. Right? This is like really cool. They have details of it, they got the schedule of the opening, etc. They even have the market sentiment. Like, okay, in the last month it's bullish, right? The Euro USD is bullish, the USD is going down, Euro is going up as a whole, right? But as of this week itself, there are more selling sentiment versus the buying sentiment, and the calendar is all inbuilt in it. There's no need to like jump out of time frames, out of other charts, out of other platforms anymore to look at all it. It's all there. And in fact, they have this thing that is that is really cool. This yep. So move myself here, right? They have all the embedded in a way analysis inside. Like for example, if I see that, okay, I think like these are all ideas, right? Training ideas, right? Like I see that this is really cool. For example, what I do is I just click on copy to the chart. It will go right smack to the chart itself, and then I have a ready trade potentially. I mean, obviously we cannot rely this on its own, but I will still do my analysis right there. But this saves me time. It saved me time for me to be like, would this work or not? Right? And obviously I have to fit into my trading system, but it saves me a lot of analysis time, because I would have missed out a lot of setups in a way had it not for this. Like trading ideas, and like this is like, I still have my own filter. I don't take every trade they give me, but this in a way screens out stuff for me. I think that's like really, really cool. Okay, now let's take a look at another pair, XAU USD. So this is gold, right? So now, if you see that price makes a high, it comes down, and then after which it broke the previous high, and then it's now heading up. So the question is, it's like a trend continuation again, right? Trend continuation, uptrend, right? So right now, entry over here. Should we buy now? It's now making higher highs. Gold has been going up, right? Gold has been going up. Gold has been making up higher highs, right? Like, should we enter over here for a buy in this area after the breakup of the highs? So had we entered a buy around here, price went down after which. Now, oh, that sucks. Why? How could we stop that? I mean, this is common, right? And this could be probably why you were losing money as well. So now, same thing, multiple time frame analysis. So this is a 4 hour. Let's go up to the daily itself. So now, in the daily time frame, what we can potentially add is that, okay, so in the previous example, we added trend line, channel, correct? So I just want to give you more examples. So what we also always want to find is the area of value. So in this case, what we can add is the 50 moving average. So if the 50 moving average is kind of like, if you watch my videos on the strength of the trend, right? This is whereby this is a healthy trend. So when the trend is healthy, it's going up, the price always comes back to the area of value. So the 50 period moving average is the area of value in this case. So price goes up, comes down, close, goes up, comes back down, close. So when the market is going up, you want to, in a way, not want to buy right smack. In this case, earlier on over here, you don't really want to buy right smack at the highest high of the high. It's very hard, especially if you see in the past price do come back, right? Pretty frequently, price do come back to the area of value. That's where you can wait for price to come back to the area of value in this case. So if we drop that back down to the time frame, that was here, right? About here, yeah. So the highs goes up, then it broke higher high before it goes up to the top, and then it come back down. So before going back up again. So the 4 hour you could not really tell, but when you go to the daily time frame, that is where you can see that, hey, you now no longer be like, I need to keep chasing the trades. I don't, but every time I chase the trades, I get stopped out. So now the mindset shift will be, okay, I need to find the area of value, right? And where is the area of value? And I need to now cross-check multiple time frame, one time frame up, factor of 4 to 6, whatever time frames that you're trading, right? This example is the 4 hour to the daily. It could be any example. You get it? It could be the daily to the weekly as well. All right. So, or it could be the 1 hour to the 4 hour as well, right? That will be the factor of 4. Got it? Right. So now, if you see that price respects the area of value, in this case, we are using a 50 period moving average. It's just one of the moving average that we added. There could be other moving average depending on the trend itself, right? In this case, 50 is the area of value. We wait for price to come back down. You know, like, it's just like the stock market. The stock market is always going up. But if you want to keep buying higher, it's always going to get high. But stock market always comes back to the area of value. And those are like the best spots to get in for the dip before it goes back upwards. So if you truly understand multiple time frames, you will now no longer chase all these bad entries, right? You will recognize when the price is like overstretched, right? And that's where you take a step back and you wait for it to return to the area of value, to a high value zone. So that is the edge in the market where you are now being able to see the bigger picture, and you are now able to stay patient, and you only strike when the odds are stacked in your favor. All right, so now let's talk about our final secret. Do you want to like instantly improve your win rate with multiple time frame analysis? Right, this is where you can stop guessing and start looking for break of structure. But only in the direction of the higher time frame trend. Okay, so now let's take a look at this pair, USD JPY. So USD JPY, let's take a look over here. So what is this area? This is an area of resistance, right? Previously, price has respected this area. Overall, it's in a downtrend. Price pulls back up to the previous support, now turn resistance area. This is also an area of value, right? So entering here, it's actually a good spot of entry. Now, price pulls back up, comes down to this area. Okay, so I want to go for a sell, right? You want to go for a sell, but hey, there is no price action, right? There's not really any candlestick pattern. So okay, let's drop down the time frame, right, for execution. So from daily, we drop down to the 4 hour itself. So it is this area, right? So yep, it is this area. So now, right? So yep, so this is the one. Okay, here. If you take a look at this, price goes, what's happening over here? There's not really any big nice pin bar, shooting star, bearish engulfing bar, etc. Really, and the truth is that if you want to wait for candlestick pattern for entry execution, it doesn't happen all the time. So and that's what happens to a lot of traders, right? They miss out trades because there's no candlestick patterns. But the pros don't just wait for candlestick patterns. And that's where the break of structure would come in. So if you look at what happens before, this is low, this is a high, right? Then this is now the low, it goes higher, high, right? Higher, high, high, high. And now this is the low, right? This is now low, this is now a high, this is now a low, right? It goes up, this is now high, this is now low, it goes up, this is now the high. So the high is here, the low is here. The moment when price broke kind of below this low over here, right? When price breaks below this low over here, this is the point whereby price has, in a way, indicated this was all high lows, high lows, right? Until it broke through this low. This is like an official low, right? I mean, there's some small ones here, but we want to use the main one, which is this, right? So the moment once price broke through here at this area, this is now like, okay, we can now enter. So you can enter your trade setup over here for the sell, the stop loss at the top, and then look at how far price went after which, right? So this is the key. Using break of structure as the secret sauce for entry with the combination of higher time frame or multiple time frame analysis, coming back down, resistance level, area of value, because this is also a pullback as well, executing this in the lower time frame using the break of structure method. Is this good or not? Yes, yes. All right. So this is how I've been using this methodology, the multi-time frame methodology, to make six-figure trades. And I'm sharing this all with you over here. All right. So one last thing. Okta. So I truly like this platform like so much. There's so many stuff ongoing itself that I have been using, right? Which is why I actually asked them to give all my followers, right? Anyone who is watching this video right now, right? A special promotion with them only if you sign up with us with this special link. I'm not getting any cut, right? I just want to make this special because I really like this platform itself. All right, so there is a special promo code itself, right? And in the link below, right? And we are also creating a Telegram group chat, especially for AFM, AsiaForexMentor, AFM, and Okta, whereby they are going to give you exclusive promotions inside. All right? Most traders, what? They misuse or they use the multiple time frame analysis the wrong way by either zooming in too much, right, and getting lost in all the noise, or they zoom out too far, right, and they miss the relevant details. So what you got to do is to find the sweet spot using the factor of what? 4 to 6. This is where you are going to determine the right higher time frame that will give you the exact context that you want without overwhelming you. All right? Then next, we talk about the combined levels. So combined levels means what? It equals high probability trades. When the support or resistance level, right, they aligns with multiple time frames, higher time frames, it becomes significantly stronger. All right, and next, avoid trading what? Stretch markets, right? Stretch markets. Use the magnet theory, right? If price is far away from a key area in the higher time frame, wait for the pullback before entering. All right, and then break of structure. And that is the key, right? Trade in the direction of the higher time frame trend, right? And then you look for confirmed structure shift in the lower time frame before entering. And you no longer need all the candlestick patterns confirmation, right? And then that's where you can forget like all the guessing. You are now trading with precision by aligning your trades with the dominant trend, and you time your entries based on multiple time frame confluence. So thank you so much for watching. If you enjoyed this video, please give it a thumbs up, right? It really helps to keep the channel growing. And if you are new here, don't forget to hit that subscribe button and turn on the notification bell so that you never miss an upload. So we also love to hear from you, right? Drop a comment below and let us know what you think or what you'd like to see next. I mean, your support truly means the world to us. It keeps us motivated to bring you awesome content every week. And if you're keen to learn more, I've created a free 5-part comprehensive training where I show you exactly how I trade using my lifestyle method. Link in the description below.